Micron is an American semiconductor company that specializes in memory and storage solutions. Their products power a wide variety range of devices from consumer electronics to enterprise data centers and automotive systems. The company designs and manufactures DRAM, NAND flash, and SSD storage solutions. Micron's customers coverage a large range of industries such as consumer electronics with Apple, Samsung, and even Dell, and cloud and data centers with Amazon, Microsoft, and Google. While in the automotive industry, they have customers such as Tesla, Ford, General Motors, and Toyota. They even have enterprise and AI industry customers with Nvidia, AMD, and Intel. Micron has a pretty good business model for the future because of the expanding need for data center storage and high performance computing. Also, with the growth of AI, Micron's future looks pretty good to sustain their growth. So today in this video, I'm going to determine what price we should pay for Micron stock and also look at the financials of the company using my 7-step stock analysis. The first metric that I'm going to look at for Micron is the PE ratio. The PE ratio is the price of the stock divided by the earnings per share, and I want this to be greater than 0. If this is greater than 0, that means Micron is making money and is profitable. So as we can see with Micron, they have a trailing PE ratio of 26.13. This means that Micron is making money and is profitable, so that is our first check mark. Now I want to go to the forward PE ratio, and I want this to be less than 30 to show that in the future we are expecting a decent valuation for Micron. This is slightly different than the trailing PE ratio because the trailing PE ratio is the present earnings per share. However, the forward PE ratio is the earnings per share expected by analysts in the next year. So we want this less than 30 to show a decent valuation for the future of the company. And as we can see here, it is a lot less lower than 30. It has a 12.42 forward PE ratio, so that is our second check mark for Micron. Now I want to look at the revenue growth rate of Micron. I want this to be growing at a greater than 5% rate, which means their sales have been growing at greater than 5%. And as we can see with Micron, their revenue has great variability and is very cyclical company. However, over the past 10 years, they've been only growing at a 4% rate. So it is barely lower than what we want, but it has been growing less than 5%. So that does not look very good for Micron over the past 10 years. Similar to the revenue growth rate, I'm going to look at the EPS growth rate, which is the earnings per share. So this factors in the net income of the company and the shares outstanding. So as we can see here, Micron's earnings per share has been all over the place and was negative for the past few years, only until recently they have become positive. However, the EPS growth is actually negative 14% over the past 10 years. So this is an X for Micron. So far, the revenue and earnings per share rate growth has been pretty bad. Now I'm going to take a look at the shares outstanding of Micron. We want them to be buying back shares. If a company buys back shares, that means that us investors, one of our shares will be worth more since there's less amount of shares outstanding for people to buy the company. And as we can see here, over the past, say, 6 to 7 years, they've been buying back shares. However, it looks like they've had some acquisitions where they've had very high spikes in their shares outstanding. But I would say this is a check mark because since 2018, they've been buying back shares pretty good. However, it's a little worrisome that they have been increasing their shares over the past year. But I'll give this a check mark for Micron. The next metric that I'm going to look at is the total debt divided by equity ratio. I want this to be less than 50%. If this is less than 50%, that means they have double the amount of equity compared to their debt. So this is going to show us if they are likely to go bankrupt or to see what their debt situation really looks like compared to the amount of assets they have. And as we can see here, they have a 30.86% total debt to equity ratio, which is less than 50% and is a check mark and looks pretty average for a company like this. So that is a check mark though. This is less than 50%. So it's probably unlikely they go bankrupt, but it doesn't necessarily mean that they won't. And it's not an amazing total debt to equity ratio, but nonetheless, this is a check mark for Micron. The final metric that I like to look at is the analyst expectations of EPS growth rate for the next 5 years. And I want this to be greater than 5%. And as we can see here, analysts expect Micron to grow at a 29.2% rate over the next 5 years. So completely the opposite of what they've been doing over the past 10 years, where they were a negative growth rate. And now analysts expect them to grow at a 29% rate. This is a check, but I'm a little bit cautious of this just because in their past, they've been literally going negative EPS growth. And now all of a sudden they're going to grow at a 29% rate. It seems pretty unreasonable, but I do think it could happen, especially with the increased demand for their chips and for the AI revolution. So this is a very good checkmark for Micron, and it's almost 6 times greater than what we want of a greater than 5% rate. The final thing that I'm going to do for Micron stock is use an intrinsic value calculator to determine the price that we should pay for the stock. For this, I have to use assumptions for the next 10 years, and the first assumption I have to make is the revenue growth rate. For the next 10 years, I think Micron will grow at about a 12% rate. Analysts expect them to grow at about a 14 to 13% revenue growth rate, so I'm going to keep this at about 12% because I think that's pretty reasonable. And for the net profit margin has been all over the place here, so it's kind of an educated guess, and I'm going to put this actually at 15%. I think they could be at about a 15% net profit margin. Cash conversion rate we can leave right at 100%. Terminal PE ratio, I'm going to leave this at 20, since this is about the average of the stock market, and I think Micron's about an average company in terms of growth rate and financial health. So I'm going to leave this about the stock market average as of right now. Finally, I'm going to put the discount rate at 15% to ensure a margin of safety, especially because we're buying individual stocks. And as we can see here, we have a fair value price of basically what it's at right now at $93. So if you bought this today believing these assumptions, you should make about a 15% return, which is a lot higher than the S&P 500 average. Normally, the stock market returns about 9% per year. So if you bought this, you'd make a 15% per year, and you'd make over 6% more than the actual stock market. So if you do believe these assumptions, once again, I think this is a buy. So thank you guys for watching this video. Please subscribe. We're trying to get to 1,000 subscribers. Hit the like button. Comment down below what stock you want me to analyze next. See ya.